Continuing our discussion before, how do you assess the impact of the election on the expansion plans of businesses in Indonesia, particularly those awaiting the final election results before proceeding? Steve?
Well, I think the prospects are very good. Again, we shouldn't see a lot of change in government policy going forward. It is fairly remarkable, the similarities in terms of the three candidates. There are differences, of course, but on the broad top-line issues, they're all arguing that continuity of current policy is really best. And if indeed that is the case, then I think companies will be very, very comfortable to get back in the game after perhaps waiting for a few weeks or so, and realizing that with a little luck, it will be business as usual, and they can continue on in investing and producing product and so forth. So I don't expect a lot of disruption, beyond the very immediate term as companies get used to who the president will be and get a little firmer idea of the details of policy that may come out.
And what measures can be implemented to mitigate potential market volatility after the election?
Well, I think one is assuring that that foreign investors continue to be welcome. That goes to the fact, that again, there should probably be no quick changes in terms of policy, in terms of taxation, in terms of intellectual property protection. Just maintain business as usual. I think also one of the factors that has supported Indonesia, not only recently, but during the pandemic and prior to that, as there was a lot of volatility in interest rates and inflation, is the stability of the central bank. Bank Indonesia has done a very nice job of acting when they had to act and holding when there was no need to act in terms of managing monetary policy. And in fact, I think a very good point to remember is that the central bank has made moves in terms of, say, raising interest rates in the past, when maybe it wasn't in the best interests of policymakers in the country, but it was in the best interest in terms of financial stability and foreign exchange stability and such. So I think the stability of the central bank, the way it's proven itself over the last 5, 6, 7 years, is a very critical piece of the stability of the investment climate, if you will, in Indonesia.
Move to Vishrut. How do you think our new chosen government will give a big impact to our sovereign credit rating in the future?
So I should start off with a disclaimer. I'm not a sovereign analyst, so I can't speak too much about that. I can, however, say that our sovereign team did publish a ratings update on Indonesia a few months ago, where they left the rating at BBB with a stable outlook. This, of course, indicates their confidence in the medium-run profile of the Indonesian economy and the rating profile, which should indicate stability post the election period as well.
Given Indonesia's historical patterns of economic slowdown during political transitions, what strategies can be employed to stimulate economic growth in 2024?
Yeah, so 2024 for the region as a whole is likely to be a little bit of a challenging year. What we see when we enter this year is that monetary policy is tight. We're seeing a period of disinflation that is affecting consumer demand to some extent across APAC, actually, and not just Indonesia. So this is going to be the backdrop with which the Indonesian economy faces 2024. Having said that, we still expect fairly strong growth of 4.9% for the Indonesian economy this year. And given the current inflation environment is fairly benign, we expect that monetary policy will likely to be eased over the course of the next few months. We expect 75 basis points of cuts from Bank Indonesia this year, which should help support consumer confidence. In addition, the fiscal balance has been normalized over the past few years quicker than peers, which means that there is fiscal space. We do not expect significant fiscal consolidation, which should provide support on the fiscal side as well. So really setting a course for a pretty normal transition into 2024, and no extraordinary stimulus would be needed to get there in our view.
All right. What are the expectations of global investors to our presidential candidates?
Yeah, so I think as we spoke on, I mean, there's a degree of calm surrounding the Indonesian economy from the investors' side, and a sense that the political transition is likely to be smooth and fairly stable. As a result, we see that investors have remained pretty calm. There's one element of EM-wide factors over the next few weeks that could affect Indonesia, which is, of course, the U.S. interest rate environment, where we've seen overnight that inflation readings have been pretty high, and that means that we could see some volatility on that front. But it's likely to be a regional feature rather than an Indonesia-specific feature. So that could affect some investor confidence. However, it's unlikely to be related to the election features, where policy continuity and the strength of institutions and the policy platform to power sustainable growth in Indonesia will be the more critical factors that affect investors' assessment of their Indonesian investments.
All right, move to Steve. Steve, what kind of character that you think might give stability in the mindset of global investors?
Yeah, first of all, again, I think that global investors look at Indonesia with a fair amount of confidence already that conditions will be fairly stable going forward. I think some of the factors that investors are looking at is what the impact of the global economy this year will have on Indonesia, because the global economy is slowing. I do expect that the global economy, broadly speaking, will not dip into a recession, but Europe is close to zero growth. The U.S. economy is likely to slow going forward as interest rates stay high, and of course the Chinese economy is struggling to maintain growth and get over all of the many imbalances that are holding the Chinese economy back. So this will create some weakness in terms of export demand, and the economy will be more reliant on simply domestic demand within Indonesia. But again, I think that's okay. And if this is a period where global external demand works to slow the economy a little bit, at least during the first 3 quarters of this year, all the more important that government policy remain stable in terms of continuing to fund infrastructure, continuing to work on improving education and training and so forth. These are the things that should be done nonetheless, but can provide some support to the economy when other external components of the economy begin to slow. But again, I think it will be a fairly good year for Indonesia going forward. As Vishrut mentioned, inflation is coming in, and so consumer spending should be fairly good over the course of the coming year.
Looking ahead, what are your projections for Indonesia's economic growth in 2024?
So 2024, we're looking at growth in the high fours, maybe something close to 5%. And then going forward, 2025, 26, really sort of variation of between 4.5% to 5% each year. And again, I mentioned if there are any risks to that, maybe on the upside again, if government policy is successful in continuing to elevate that productivity growth of the young labor force in Indonesia.
Back to Vishrut. What are your projections for Indonesia's economic growth in 2024?
So we expect 4.9% growth for this year, so probably very similar to what Steve and Moody's have. Over the course of the next few years, we expect growth to be in the 5-ish% range. Looking beyond that, when some of the demographic dividends start to ease, then that's when we expect growth to move towards the 4.5% mark in Indonesia, and that's when it'll be, of course, very relevant. What happens on the productivity side, and whether Indonesia's economy can sustain and move through that transition period successfully through upskilling the labor force and through moving on to the value-added technologies that are likely to support economic growth going forward. So all in all, a pretty favorable profile for the next few years for Indonesia, and looking beyond that, a period of transition as the economy moves away from its current stage of growth.